welcome to the daily insights that matter. Now, the capex spending by private companies have been rising. However, the signs of a broad-based capex cycle is still not entirely evident. Now, in response to this challenge, the Indian government has shifted its focus towards public capital expenditure as a potential solution to crowd in the private investments. Now, the recent move in the union budget, which was announced in February 2023, was to increase the capital expenditure by 33% for FY24 to rupees 10 lakh crores compared to rupees 7.5 lakh crores in the previous fiscal year, which is a very significant step. Now, by investing more in infrastructure development such as roads and railways, the government aims to stimulate demand and consumption within the country, ultimately boosting economic growth. Now, the centre's capex in the April to June quarter came in at 2.78 lakh crores or 27.8% of the FY24 target compared to 23.4% of the corresponding target in the year ago period. Moreover, the centre has set a target to undertake budgetary capital expenditure of rupees 6 lakh crores or 60% of the budget estimate for FY24 in the first half of the current fiscal year, as it seeks to minimize the adverse effect of the global demand slump on the economy. Now, the increase in capital outlay is a positive move with long-term benefits. The emphasis on infrastructural development will not only drive economic growth but also generate employment opportunities, creating a ripple effect throughout the economy. Now, the expansion of public spending is a well-thought-out strategy to revitalize the economy and encourage private companies to join in on the growth trajectory. The Indian IT industry, which has had a golden run during the pandemic, is currently facing a challenging period over the last few quarters. Additionally, there is an anticipation of a significant decrease of around 40% in the annual hiring due to uncertainties in demand and a slowdown in the tech-related services space. Now, as per data provided by staffing firm Xfino, the leading IT firms in India are projected to hire around 50,000 to 1 lakh new employees in the fiscal year FY24, in contrast to the 2.5 lakh individuals hired in the fiscal year FY23. Now, this indicates a significant reduction of about 40% in the recruitment activity. Additionally, in the first quarter of FY24, India's top 5 IT companies reported a cumulative decline of 21,838 in the net headcount of their companies. Now, even prominent global IT giants like Accenture and Capgemini, which have a substantial workforce in India, reported a decline of more than 5,000 employees. Now, the primary markets for the Indian IT industry, which is valued at $245 billion, are the United States and Europe. Now, a significant economic downturn in these two regions would inevitably have a negative impact on India's service exports. Now, this would lead to disruptions in the demand cycle, a decrease in the non-essential spending in projects, a reduction in the client orders, and similar effects going forward. Now, as the pace of hiring slows down considerably, IT companies, however, are concentrating on enhancing employee utilization matrix, which measures the proportion of employees engaged in active projects. Once the challenges posed by global economic conditions diminish, there is a possibility that the IT sector will experience a reversal of its current situation. With that, this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com